We are here on this amazing day. Okay everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Alright guys, the market started off with AUD CHF back in November 2001. There's an area of support where the market started off at. The market walked into an area of resistance here, and it dropped into an area of support here, and then it went to new areas of higher highs here. So when the market started off, it started from support. It pushed right up into this area of resistance. Was able to break. Market dropped right down to new areas of support. Broke one area, went to another area of support. I also see a pattern. The pattern I see is a single bottom. So the market pushed right here, consolidated. You got that drop for that single bottom. Pushed back up, retest, and the market came up. If we look down a lower time frame, this area here can be a double bottom because of the wicks. So the market basically did something like this. It could be a double bottom in a lower time frame. 1, 2, 3, 4. They go to retest at the doji, and the market broke the resistance. 1, 2, 3. Went into new areas of higher highs. So once the market pushed here, we see the pattern. This is the evening star. And then after that we had an engulfing pattern. Once this pattern engulfed the previous red one, this is doji, and the previous two green bullish patterns, the market came down. There's also another pattern here at the support line. Double bottom would push the market up. First leg, second leg, third leg, fourth leg, double bottom. Here go to retest at this doji. And after that the market shot up to previous areas of higher highs. When the market got here, it just consolidated back and forth. So if you would have been in this area here, you would have been buying and selling back and forth until you would have seen it drop back to support. The market created enough momentum. Got the engulfing pattern, closed above the bearish pattern, which is this red candle. And then once the green candle closed over the red one, the market went up to new areas of higher highs. So once the market pushed up here, it looked like a double top. So here we go. Here go the pattern. First leg, second leg, third leg, fourth leg, and this would be the resistance area. So the market basically had a hard time breaking this area here. We got a long wick up to the top. It wasn't strong enough to close out. Market dropped back down. Created enough momentum to create the push up for the second time. We got the railroad tracks. Extremely bearish candle right here with the red one. And the market closed out below the previous candle and a half or more, and then the market dropped back down. So this is the highest highs. Basically the market dropped back down to return to areas of lower lows. We got some retests here, and then this is the area that pushed market up. If we look down the time frame, it could be a double bottom, but for right now it looks more like a single bottom. So the market just came down. Got the engulfing pattern after the doji, which is a green candle, and the market pushed back up, broke through a few areas of resistance. One, two, three, four, trying to return back to previous areas of higher highs. Ended up stopping at second level areas of higher highs. The market wasn't able to break through, came back to support, to retest, came back up to resistance, came back to support. So basically what the market did right here, just consolidated. So you've been selling here, buying here, selling here, buying here, selling here, buying here. You probably would have waited to see what's going on in this area. And then the market ended up dropping, going right back to previous areas of support. Previous area of support at lower lows. So we got that downtrend. Okay, so the market, boom, 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 and so on. When you guys, Forex 101, when you guys see these trend lines, you see these trends you're about to get into. If it's a downtrend, you want to be looking for entry near the top side of the trend line and not the bottom side. For instance, for example, if you find, let's say if you think this is entry right here, and you take it, there's a chance that, you know, it'll go up, come back down, and then show up again, so it'll put you in the negative. But if you had caught the entry on the top side of the trend line going down, then you'd have just went for that drop. So the areas of entry for a downtrend, for this downtrend, will be here. So you can look for entry. This area, this could have been entry. This area could have been entry. And this area could entry. And this is possible entry right here. But because it's so low to the support area, I'd probably just waited until it returned back to this area here. And then I would have took it for that sell. So once the market got back here, I think this is the lowest low the market has ever been in. So the market has, this is the lowest lows. It looked like the lowest lows the market has ever been in, but it's not. This is. So basically what the market did, it came over this way. And there's about 2 levels there. And the market just basically broke up and down this support and resistance. It definitely rode the top a little longer than the bottom. Wasn't able to break through. So it's basically, if you think about me putting this red line a lot lower here, so basically, let me see if I could change it up. So this line is right here. Basically what the market was doing was trying to break it. Try to break this resistance. So it touched once, touched twice, 3 times, 4 times, 5 times, 6, 7, 8, or just 7, and it wasn't able to break. On this time frame, it's 7. If you go down a lot lower time frame, it probably 7 times another 3 touches. And then the market went into a sell drop, and then we are right here. And now we got to figure out what the market pattern is. If I see here, so this is a big identification that the market's going to go up. So we see these long wicks at the bottom. So once we start seeing these long wicks, the long wicks is explaining that the market dropped all the way down to here. So this is the lowest the market has ever been in 2020 of March. And then the market wasn't able to close at the wick. It closed here at this location. And then we got the next pattern was engulfing. So that's the second confirmation that the market's going to go up. And once it closed out, once this green bullish candle would have closed out above this bearish red candle, then this would have been entry to take it up to this area here. Okay. This look like I see a pattern in here too. I'm not 100% sure just yet. It looks like a double bottom, an incline double bottom. So 1, 2, 3, 4. That's the double bottom. And here go to retest. So the market either going to go sideways here, it's going to go up or down. So we have to identify what's going to go in the market right here. What we're going to do is clear our screen. Then we're going to head back over to price action. We did find out the overall trend is an uptrend. So our overall trend is an uptrend. So now we're going to look for our SR lines, and how we're going to do that is we'll head over to price action. We look for the area that price action is trying to break. And it looks like this area here, this inverted peak. Okay, we create our SR lines. We're going to head down the time frame. We're going to do a top-down analysis. So what I'm going to do is I'm going to add another SR line. because I want to show you guys if the market drops in reverse, how far it's going to go up. We can see that if we do get that engulfing pattern here, it would definitely go up to back to areas highs, but we don't have an area if the market goes up higher. So what we're going to do is just go back and we're going to grab another SR line. We're going to place it right here at this peak, and we're going to change the color to red. Let's go with 2 levels up. We're going to grab this peak right here. Now we're going to go back down the time frame. Okay, so what we're going to do is we're going to work on some SR lines between our red and blue lines. The main focus I'm focusing on right now is currently just the blue lines of the SR. So we're going to look for peaks and inverted peaks. We're going to change the color to blue. There's an inverted peak in that area here. There's another peak right here. I'm going to zoom in to this area. There's another peak right here. Okay, and that's it. So we created our SR lines on the weekly time frame, top-down analysis. Now we're going to I'm going to show you guys how to do the break and retest. So for example, if the market's headed up somewhere in that trend, what we'll do is we'll let the market move up to our SR line. We will not be taking entry here. We'll wait for the market to break out SR line. Once the market breaks out SR line, I'll head back to the SR line. Right here is where we look for entry for the up position, which will be the buy. And if we see it, we'll take it, and we'll take it to the next level here. So once again, we will not be looking for entry at the SR line. We wait for the wait for market to break the SR line, to come back to return to the SR line. Then we look for entry, and we'll take it to the next level up, which will be right here for the take profit, TP. So let's see what's going on in the market with this price action on this time frame. So basically what the market did, so there's an area of resistance here, there's an area of support here, and the market came up, broke through the resistance, retested the resistance, which turned to support. The market pushed up again to new areas of this resistance here, and the market dropped right back down. So it's trying to form, it may come back up. So it's trying to form something here. There's a chance that it can consolidate, and I say that because the 7th candle to the right is a doji, but what's important about this doji is long wick. So once you start seeing these long wicks, these areas start showing you that the market can consolidate itself within the bottom of this support of the body of this candle and the top of this wick. So basically, if you put a rectangle, let me clear this off. If you take a rectangle or a square and you drive it right up that candle wick, and you bring it over to the right, and then you bring it back down, doesn't matter how far you go to your right, and you bring it back down to that body of the candle, and you bring it back over to the left. So basically, this is the area the market's going to have to form and do what it do. So whatever's going to happen, the market's going to show itself in this area here because of the wick. That wick showed that the market may not push up just for right now, and we do have our trend line, so it can definitely respect our trend line and go up to new areas of higher highs. So let's clear this off. Let's grab our rectangle, and let's grab the top of that 7th wick from the right, and bring it down to the body of that candle. So whatever's going to happen is going to form itself in here. It can do any type of pattern, so we got to figure it out. So what we're going to do is going to head down the time frame and see if we can see it. Okay, so the only thing I see right here so far is an area, major area of resistance. Okay, so what the market did is the area of support right here. And what the market did, came up, touched our area of resistance, so it tried to break the first time, didn't break, went back down to support, created enough momentum for another push up. This is the second break, wasn't able to really break through and go up, but it broke it, came through, third retest of that area, then wasn't able to break, tried again for a fourth time, wasn't able to fully break out, went right back down, created enough momentum for a 5th, 6th, 7th, 8th, 9th, 10th touch, because we see all these wicks touching. The body wasn't touching on the resistance area, but the wicks is confirmation that the market's having a hard time breaking through, because we got definitely in this area had about 1, 2, 3, 4, 5, 6, about maybe 6 or 7 candles touching that close area of resistance, which in this whole area the market wasn't able to break it, so it basically dropped right back down. So it may try to reform itself in this area here, regain that momentum for another push up to the top. Okay, and it also looked like a pattern, so I want to demonstrate what I see. I think I see a double bottom forming. So once the market came up, it came back down, came up. So all this area, if you can find that pattern, it's cool, but if you can't, it's cool, because the market basically kind of reset itself right here again. So here we go. First leg, second leg, third leg. If we catch that engulfing pattern here, it can drop a little lower too. So if we catch that engulfing pattern anywhere here, the green candle is going to engulf over the red one. So that's the bulls engulfing over the bears. So once that happens, the market will head back up to the previous area of resistance. And then once we get here, we got to see if the market's going to break. If it does break, we'll wait for that retest. And then once that retest happens, then we'll look for entry to take it to the next area, which will be our next take profit. So basically the important area that we need to pay attention to is this, like a double bottom. If we do that, get that confirmation of that engulfing, the market will go up to previous areas, higher highs. Let's look at a lower time frame to see if I see any type of other entry. Okay, so this is all the touches the market did at that resistance line that I lined up on the daily time frame, and then the market went back to that previous areas of support. So it's trying to gain momentum. So the same way, it's probably just trying to mirror the same area of this. So once it return back to area of support, it'll probably try to consolidate back and forth sideways. It can do a single bottom, double top, triple bottom. It can do some patterns, and then the market can just go straight back up to previous areas of resistance. So the most important thing is pay attention to this area, guys. This area will be entry. So now, for example, if this green candle engulfs over this red, guys can take entry. I'll probably take you up to this next line and see what's going on. At the same time, just pay attention to the pattern, because you can get a single bottom, a double bottom. Because if the market comes down like it did, and you get that engulfing pattern, it can come back up, but then come back down for a second time for a retest. Okay, and then it can do that, push up to previous areas of resistance, so form that double bottom. And once you get that breakout of the SR line, that'll be confirmed that the market may be going up for sure after the retest, and then look for entry and take it up to the TP, which will be an amazing trade. Okay, so for you guys to figure out what's going to go in this market, if price is going to respect our trend line for the buy position, pay attention to this area. It could do a double bottom, single bottom, triple bottom, or any type of pattern that's on Google. So you go to figure out what's going on, go to Google, type in Forex pattern cheat sheets. That's Forex pattern cheat sheets. You guys will go to images, and you guys will review all the images on Google. You do not have to remember the name, but just remember what you see, and then take what you see back to the market, and you'll be able to find entry and take it to your TP. So let's say if this was a trade that happened, we catch that engulfing pattern, we'll take entry, in that area here. We can take it to our next SR line, which will be here, because the market would be here. We want to take it here for just 13 pips or 820 pips. We can stretch it out to our next SR line for 64 pips. If you're confident that the market is going to go up higher, then you can pull it up to the area higher highs, because market is trying to return back to area higher highs. Once you get here, because you don't want to overextend, because if you overextend, the market may not get here. See, this consolidated area right here is a major area of higher highs, so market will return back to here. If it don't, it will drop back down. And then once you get here, we'll look for entry again to take it up to new areas or previous areas at higher highs once it break that. So the next area here. So if we do see that pattern, the setup will be somewhere in this area. Take it up to the TP for 87 pips. Set up the pullback for the stop loss. So I could get it below this wick for about, go for 25 pips. Amazing trade. AUD CHF, 87 pips to the top, 25 pips to the low. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching. Thank you for your attention. AUD CHF.